The U.S. sports betting industry is on a roll. Only 6 years after a Supreme Court decision paved the way for states to legalize betting on games, the sector is generating billions. And that may just be the beginning.
There's not a lot of industries that have this sort of raw growth potential behind its back.
This market has grown so much in such a short period of time. Growth in products, channels, platforms.
The growth has been crazy. It's not just a land grab anymore. The companies that are the market leaders are having to innovate, come up with new ways to bring people into the tent.
I think this will be a growth industry for the next decade, maybe longer.
DraftKings launched in 2012 as a platform for daily fantasy sports. Until 2018, gambling on the outcome of a sporting event was legal only in Nevada. Now, 38 states and the District of Columbia permit some form of sports wagering. As the map has expanded, DraftKings revenues have soared. The company went public in 2020 at a valuation of over $3 billion. Now, the figure is closer to $20 billion.
I think we're better positioned today than we've ever been.
So when DraftKings announced leadership changes in early 2024, the moves were made from a place of confidence.
Yeah, we got what we wanted out of it.
Alan Ellingson's promotion to CFO fit neatly into a strategic plan to maximize efficiency.
He's been a great addition to the CFO seat. He's been at the company for over 4 years now and really has been tremendous. Leads our analytics function as well.
How much of that was always the goal, to bring someone up within the company itself?
That's usually the best way if you can do it. With somebody like Alan, we had seen so much of him and he had had so much exposure to all functions of the business. I knew he got it. I knew he understood it. There was no question about it. Overall, it seems like you're feeling good about things.
I am, with the rapid fire iteration.
What's been the most surprising for you of stepping into the CFO role?
Before I became the CFO, worked very closely with every aspect of the company to understand what we're doing, why, how we're spending money, what was the effective use, performance managing the company. And it's one thing to be doing it internally and keeping track of all the data and all the aspects of the business, but then taking all that and combining it into a nice, clean, concise message and sharing it externally has been the new part of the job for me that has been a great learning curve.
Do you like the challenge of it?
I love the challenge.
Internal promotions send a message of continuity. But make no mistake, Ellingson sees driving change as central to his job.
We're in an evolving business, and rather than being complacent with where we're at and locking in on a fixed view of how the world is, the metrics we think are the right metrics to be looking at, we're constantly evolving and tweaking our expectations for how things should be performing. We're constantly looking at things in different ways and trying to figure out what is the right measurement for understanding how this is successful, or should we be pivoting and looking at something different. Being an analytic means not being complacent with where you are, but instead constantly trying to improve your models and your formulas to better understand what's going on.
In an industry that demands agility, DraftKings has more than kept pace with its peers. It helps that the CEO and CFO are perfectly in step.
We're always on the same page internally and with strategy. That's kind of the most important core foundational thing. He's, probably beyond me, the person that's looked to make decisions about where to allocate capital, and really more tactically day to day is the decision maker for those things.
Jason Robbins is a fantastic visionary. He can see 4 or 5 years out where the company needs to be and the steps we need to take to get there. Jason is the visionary, and I'm the person who goes out and makes it happen.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit. Though it didn't repeat that performance in the third quarter, it still raised expectations for the company's future financial performance.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarter profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
A priority for 2024 has been M&A. DraftKings has bolstered its sports betting portfolio with deals, buying odds provider Sports IQ and in-game betting platform SimpleBet. It also purchased lottery app Jackpocket, which gives the company another revenue stream and positions it to compete in the nascent iGaming market.
The bigger players, they're all talking about iGaming being an opportunity to really make a lot of money. Much more so from a margin perspective than sports betting is. And because also they don't need games on. You could play iGaming 24/7, any time of the day. As new states come on, there'll be a real nice growth strategy that's complementary to where they already have legal sports betting.
As the sports betting market has matured and grown, DraftKings customer acquisition costs have been coming down. Online casino gambling will attract new customers and engage current users with new content.
There are distinct customer types who like to bet on sports and like to bet on different iCasino games. There's absolutely overlap between the two as well.
When we are able to cross-sell a customer from one product to another, it definitely increases the long-term value of the customer and the engagement. What we see is customers who use multiple products in our portfolio of products are more engaged, are more loyal, and ultimately better customers. When we were doing the due diligence for Jackpocket, we found that a lot of our customers were actually using the Jackpocket brand as well. And that gave us a lot of optimism that Jackpocket was a valuable additional revenue stream that was consistent with the entertainment-focused product that we were trying to build.
Meanwhile, DraftKings has maintained its leadership in sports betting. It consistently battles FanDuel for the top spot in market share.
How do you think about competition? How important is it to stay number one?
Ultimately, we don't think about the competition as much as we think about doing right for our customers.
We want to be number one in terms of the most profit made in the industry. And we want to be number one in terms of customer satisfaction, brand. We want our products to be rated the best.
As long as we're making the right decisions with what we're developing, what we're pushing as, for new products and new innovations, we believe we'll position ourselves right in the market.
DraftKings' solid standing in a booming sector allows the company to play the long game. It's not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure. And there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Now, along the way, there will 100% be opportunities to drive efficiencies. And we like to think about those long term. And we're in the fortunate position where I think we don't need that necessarily to make next quarter or next year's profits. It's much more about how do we build the most efficient, scalable company long term so that we can win competitively and win with the customer.
For all the positive momentum, there are clouds on the horizon. State tax rates for online sports betting operators range as high as 51%. Illinois recently passed a tax hike that takes effect in 2025, and other states may follow suit.
Illinois said, this is a great opportunity to use sports betting to maybe fill some holes in education, in pension, whatever the tax dollars are going toward. And they've raised taxes significantly for the biggest operators, close to 40%. So all of a sudden, all of the gaming operators are up in arms.
In August, DraftKings said it planned to add a small surcharge to winning bets in 4 states with high tax rates. Shortly after, they scrapped the plan, citing customer feedback.
Is it something that needs to be ultimately in some form passed to the customer?
You know, I think it'll depend on how prevalent it is across different states. Only time will tell. Obviously, there are some short-term levers that you can pull, but for the most part, I think we're taking a wait-and-see approach.
I think every company is going to face headwinds from different aspects of the business, especially as it comes to costs and vendors and resourcing that you have to pay to facilitate. And we'll continue to look at what the right way is to handle that, like every other company does, and we'll figure out how we solve it over time.
Wall Street seems comfortable with DraftKings' approach and bullish on its prospects. Its share price has more than tripled since the start of 2023. In July 2024, the company's board authorized up to $1 billion in share buybacks, giving the CFO a happy set of decisions to make on capital allocation.
Is there a particular formula you want to follow when it comes to this?
I think we're still exploring. It's early days of where we're being free cash flow positive with excess free cash flow that we think could be used for a buyback or for other distribution mechanisms. And we're going to play it by ear and go step by step and figure out what the right answer is before we do it.
Online sports betting is now legal in more than half the U.S. States are also starting to legalize online casino gambling. These trends are driving a growth spurt in the total addressable market for DraftKings and its peers. The The competition for customers will be intense. DraftKings CEO Jason Robins says developing better products is critical to attract and hold them.
We do have some very clear lanes of focus. So on the sports betting side, very much focused on continuing to drive parlay bet mix, continuing to build out the live betting product and getting really out ahead. And then on the online casino side, really having a great content library, making sure that we're constantly releasing new games. We think that if we do a good job, first and foremost, creating great experiences, that's the foundational piece. And then having a really good data-driven, analytically driven test and learn approach to figuring out what are the effective means of getting customers to try different products. And then if we did a good job with the first part, built a great product, once we get them to try it, they'll hopefully love it and continue to play.
And the target audience is broadening demographically. Betting on women's sports is on the rise, and more women are starting to place bets.
If you're going to have to grow your market, you need to find new players and new target markets. And where they predominantly were focused on males with their initial marketing, they've definitely made a big push for females. And that's kind of intertwined with the growth of women's sports. The NCAA tournament, which has historically been a huge betting event, the women's tournament, for the first time in history, outdrew the men's event, at least in the finals.
There's much more recognition that there's not just a singular demographic that bets on sports. Just this past WNBA season, BetMGM posted a 113% year-over-year increase in bets on the WNBA. Earlier this year, they also released numbers around the Super Bowl, and the number of women that bet on the 2024 Super Bowl was up 51% over the 2023 Super Bowl.
Do women behave differently on DraftKings? Are there different products that you need to gear towards them or marketing? How do you think about bringing them on board?
I've been asked before, WNBA, you talk about how it's growing so quickly, women's college basketball, is that because more women are coming on the platform? Like, no, that's because everybody is betting more. They wouldn't be growing that fast if men weren't betting on it too. And if you look at where, on the flip side of it, the women bettors are going, they're still mostly doing NFL, NBA. Women sports fans actually are a lot like male sports fans in terms of the types of sports they want to watch.
So people will come in and watch games from the office?
Yeah, there's TVs that are...
Paul Lieberman, one of DraftKings co-founders, heads up product development and technology. More than 1,000 engineers report to him. Lieberman and CFO Alan Ellingson have to ensure this army gets the resources it needs.
We're launching new products every day. There's a release, many releases, not even just one release. We have many releases going on out on the site. So our engineers are launching new products, both internal and external. Some of them the customers see, some of them they don't. And there's a lot of focus on internal products for trust and safety, as well as external products for trust and safety that consumers may not even really see on a day-to-day basis.
So what's important to get the product that you want to make sure Alan says yes to it, that you can go forward with developing it?
We're usually aligned with, here's what our mission. We need to deliver a great product. It needs to be safe. It needs to be responsible. It needs to be fun. It needs to be stable.
And remember, when they're proposing these products, it's not just, I think this is a cool idea, let's go. It's, I think this is a cool idea, and here's why it's a cool idea, and here's how we're going to know it's going to deliver value, and here's how you should think about forecasting that and running that business along. And so on the back end, we're able to say, great, let's track it, let's fund it, let's make sure it's doing the value it has, and if it's not delivering value, let's pivot and figure out how do we get there, and if it is, we can see it because we're tracking the KPIs appropriately. So it's not just innovation, but it's innovation, funding, and then performance management on the back end.
How do you think about sort of the budgeting of new products?
We always like to keep some amount for continuing to develop, and we have a very rigorous process, not just through our annual operating plan, but throughout the years we're engaging and making decisions on when we invest. And Paul and I have a bi-weekly meeting that we spend an hour reviewing all the newest, latest ideas that are coming out from the business, and we make some very hard decisions about yes, no, maybe later, come back to us with more information. We're constantly seeding ideas from the business. We're constantly getting these things come in the door, and we're reviewing them, talking to the teams, and making decisions about what comes next. But having that bi-weekly reoccurring pipeline basically ensures that the company knows and the business knows and all the verticals know that at any time if they have an idea, they can get in front of us within a couple of weeks.
With millions of customers using its products, DraftKings has huge amounts of data to analyze. Data that Lieberman, Ellingson, and their teams can observe in real time at the company's network operations center.
We, in general, over at a given day, are processing hundreds of thousands, millions of bets. We monitor a lot of metrics. We use AI to identify what are the different trends that we're seeing, what are the deviations from normal.
The data we have up here is, as Paul said, is a snapshot of a user experience in a certain aspect of our site. And so whether positive or negative, views like this help us to identify when somebody's having a good experience or somebody's having a bad experience.
Bad experiences in online betting can mean many things, some more serious than others. Many states have seen a sharp rise in calls to problem gambling helplines since legalizing sports wagering. Companies are under pressure to show they're supporting responsible behavior and not feeding addictions.
If we think about this as a matter of business practice, as a matter of finance, no gambling operator should theoretically want their clientele to be experiencing gambling problems. What they should want is sustainable customers, because that's who drives a sustainable industry. Over the course of my career, right now, I've never seen more interest in it from the industry, which is a good thing. It's good that they're paying attention to it. There's a lot of interest in the industry to do right by their customers.
DraftKings recently introduced My Stat Sheet, a tool for users to monitor their gaming activity and make responsible choices.
We're a data-centric company, and we've noticed that our users have the same data-centric view, and so we try to weave that into our product, allowing them to see the statistics and the data of how they're engaging with the product. And it really highlights to them what tools that they have available to them to be able to manage their play.
Trust and safety is super important. It's important for our entire company, because we know that when customers have a great experience, when they have a responsible experience, they end up being great customers, and it's the right thing for us to do. So we have invested a lot, and we have a lot of tools in the back end. One of our most exciting tools was My Stat Sheet. Another one is our use of AI to identify problematic behavior. So we have millions of data points, and some of those data points are communications with our customer service agents and our VIPs, and with LLMs becoming more and more intelligent, we're able to review those, categorize them, and send people over to our player protection team, and they can evaluate whether somebody needs outreach or not.
Is that the number one use for AI at this moment, or is there anything else that's important to really use that technology for?
That's a really critical use case, but we've used it a lot throughout the organization.
An innovation-based company, when you've got a product roadmap as deep as ours is, anything that helps us get through that faster and get those things out faster, we're going to go after it.
Since a 2018 Supreme Court decision opened the door for legal sports betting to spread nationwide, the U.S. has become one of the world's largest sports betting markets. But worldwide, the industry has been growing for decades, with the UK, Australia, Italy, and Brazil among the countries generating billions in revenue. It's tempting territory for a U.S. company.
What does global expansion look like? Is there a timeline for that? Is there a point that you pivot the company and look more globally?
We have certainly looked at international expansion opportunities in the past, and I think if there were a great opportunity that we felt was something we couldn't pass up, we would go after it. But we don't feel like now is necessarily, a time of urgency to do that, and in fact, probably not the most ideal time. So if anything, I think we would steer towards waiting, but obviously we're always looking, and if there's something that really we feel is compelling, we would go after it in terms of a new market opening up or an M&A target or something like that.
First, foremost, our vision, our 1, 2, and 3 priority is to be successful in the U.S. That's what we promised our shareholders. That's the investment thesis for DraftKings. As far as going internationally, the mentality is going to be the same as for anything. We're going to look for the right opportunities. We're going to look for the right use of capital. We're going to have a very high bar for what those investments are, because we have a lot of great opportunities at home that make a ton of sense.
How do you decide, okay, this is a good use of funds to do something like this?
We're going to be comparing it against all the other potential capital allocation opportunities we have facing us. And again, with the U.S. is growing as much as it is, requiring as much focus as it does, the opportunity here is high, and we really want to make sure we're taking advantage of it.
In terms of the big American brands, them going global, I think the biggest opportunity is not really in Europe or Asia, because they're very established there. But one of the biggest opportunities will be South America. Betting is very new there, kind of like here is in the US. A lot of room for growth, for innovation, not a lot of established players. I think that South America is really going to be the next big opportunity for the US-based brands.
There are a lot of emerging markets all over the world that are happening. The US is obviously the biggest and most talked about, and for that reason, can't take our eye off the ball there. But I do think there are other emerging markets. And right now, we're very growth focused.
Alan Ellingson will be weighing a host of challenging decisions as he and Jason Robbins chart DraftKings' path forward. I asked him what he sees when he looks ahead.
What's the opportunity for DraftKings in the next decade that most excites you?
I think we've only begun to scratch the surface of DraftKings as an entertainment giant. We have opportunity to expand our revenue, our product lines, to create a single destination for entertainment.
What's the biggest challenge at DraftKings that keeps you up at night?
Right now, our singular focus on growing the company and expanding outwards it's there. We're driven. We're focused. I never want us to get complacent as a company. I never want us to think that we're succeeded. Entertainment is an evolution. It's constantly changing, and we want to constantly change with it.
Complete the sentence. The hardest part of being the CFO is?
Telling people no.
Do you have to do that a lot?
I do. We have a lot of people with great ideas, and they come and they say, hey, I've got a great idea. I want to do this. And we have to look at that in the context of all the great ideas from all the different parts of the companies and say, what are the shots that we're going to take right now, and what are the ones that we're going to delay until later on? And so going into a meeting where somebody's poured their heart and soul into an idea that they really think is going to be successful and having to say, that's a great idea, but we can't do it yet. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
So besides your skills in finance, what do you think is the skill you found most helpful in getting to the position you're in now as CFO?
It's a lot about understanding trade-offs that different parts of the organization have to do. It's understanding resourcing between different teams and saying, if we do this, we can't do this. If we do this, we can't do this. And being able to see those things in advance to be able to call them out to help see around the corner. And that's what executives and companies in general need, is they need somebody who can align all the pieces and figure out how they fit together to maximize the possibilities going forward. And I'd like to believe that I have an eye for how companies should structure themselves and how they can make things work.
Based on your experience, what advice would you give to someone who also has the goal of becoming a CFO?
You have to really want it. It's not an easy job. Because every single day you're on, and especially in this industry where every day there's a slew of sports going on, every day there's a new idea that comes out that needs to be developed. This is not a job that you retire into. This is a job that you aspire to and you step up because it's a whole new level, and it's aggressive.
And be ready to say no and break some hearts, I guess.
Be ready to say no, be ready to break some hearts, be ready to be the bad guy. But when you're able to say yes and something goes forward and it's successful, there's a thrill, there's an excitement to it you just never feel anywhere else because you were a part of something that was really big.
I'm Danny Berger. This is Bloomberg.